Hello. Hello, everybody. I am live now. I want to give some professional questions, past exam questions that can also be used in exams, and it will help you in the exams. I am going to give these questions, 5 different questions. They will come in 5 different videos. I'll give those questions and give tips on how to solve them. Then I will solve them later in a different video, not today. But I want you to look at it very well and then confirm that you can solve them. You should practice them so that when I am solving them, you will understand faster. There is enough time for you to go through it, and then you'll be able to see the intricacies in the video. The 5 videos I'm going to make, I don't intend to spend more than 10 minutes in each of the videos. So I will already read the questions out and then give you tips on how to solve it, how to solve the question. As you can see, the question is already on the screen. You can see it very well. This is a ratio question that I'm going to solve now. I'm going to read out now and give you some tips. I'm going to remove my video from, you will not be seeing me because it's going to cover it's covering some areas which I don't want to cover. So you try and be up and doing so that you understand what we're doing. It's important that you know what we are doing so that you can solve it seamlessly in the exam hall. I don't expect it to give you any problem in the exam hall after I have solved them for you. I intend to change figures. If I'm going to set that question, I'll change the figures, but if not, I will set a different question. I have always solved my questions for my students and then change figures on the board in the class. Now I want to do it online to also encourage the students to put their hands on the internet. It will actually help in many things. So right now I'm going to deactivate my video so you won't be seeing me, but I will be speaking. Please confirm if you are hearing me. If my voice is clear, let me know. If you're not hearing me, let me know. Can you hear me? Can you hear me? Am I being heard? Okay, I've seen Favor Mark just joined All-Star, Daphne Okabe joined All-Star, Miriam Sam Ibeta joined All-Star. The solution is going to be in All-Star, but the questions will be in general platform. The solution will be in All Stars, and I will solve it based on the number of people that have joined the All Star. That is when I will solve the question. Okay, Ugochukwu David, you can hear So that's fine. I can start the questions now. Okay, this is a professional exam question on ratio analysis. The summarized financial statements of Omega Manufacturing PLC for the years ended 31st December 2023 and 2024 are presented below. Statement of profit or loss in thousands. Of course, you have the item, you have the 2 years, 2023 and 2024. Revenue for 2023 is 8,500,000, while that for 2024 is 9,200,000. Cost of sales, negative figure, 5,100,000 for 2023 and 6,200,000 for 2024. Gross profit, 3,400,000. Of course, you know our gross profit is revenue minus cost of sale for 2023, and for 2024 is 3 million. Then we have operating expenses, negative 1.8 million for 2023, for 2024, 2.1 million. For operating profit is after deducting operating expenses from gross profit. You have 1.6 million for 2023, and for 2024 we have 900,000. Then we remove finance costs. For 2023 is 300,000 for minus 300,000, and for 2024 is minus 450,000. Then you have profit before tax. For 2023 is 1,300,000. For 2024 is 450,000. We'll have tax 390 for 2023 and 135 for 2024. Then profit after tax is 910,000 for 2023 and 315,000 for 2024. Of course, this is where I ended the statement of profit or loss. I did not add the other comprehensive income. It's also in order to make the question not too confusing and difficult. At least there should be questions that can be answered by everybody. So in this, I have 2 questions from the past I'm solving that can be answered by almost everybody who is serious. This one is one of them. Statement of financial position in thousands. We have items and 2023, 2024. On the current, this one is on asset side. Don't mind my presentation. I put asset on the left side and equity on the credit side. This is because these are different boxes. I just copied and paste. It's supposed to be vertical, but I have to paste it in order for it to contain in one page. I don't want to go to more than one page. So let's look at non-current assets. We have 400,000 for 2023 and 2024. 4 million for 2023. For 2024, 4.8 million. We'll have current assets. In the current asset, we have inventory and we have trade receivables. We have cash and bank, which totals 2.8 billion and 3.5 billion. So if you add the two, you have 6.8 million for 2023 and 8.3 million for 2024. That is the total assets, including current and non-current assets. We have 6.8 2023 and 8.3 2024. Then on the other side, equity and liabilities. Like I told you, It is not actually a T account that I have prepared. All these things are in their different, this is like here, this one is a different page, this is a different page, this is a different page. So they should appear in 3 pages, but I decided to put it in 1 page. So it's not preparing account as if it's a debit and credit. I prepared it. So in equity and liabilities, 2023-2024, share capital is 2.5 million, 2.5 million, no change. Retained earnings is 1.4 million, 10,000 naira in 2023 and 1.7 million, 25,000 in 2024. We have total equity of 3.910 million and for 2023 and 4.225 million for 2024. We have a non-current liabilities loan 1.5 million and 2.6 million respectively. Then current liabilities, we have trade payables, we have short-term borrowing, we have total current liabilities, which is addition of all the current liabilities. For 2023, 1.39 million, and for 2024, 1.475 million. So when you now add total equity and liabilities, you arrive at 6.8 million and 8.3 million. So this is the set out of the statement of profit or loss and statement of financial position. Like I've said, I have not added a statement of other comprehensive income and so on. They are required. A. Compute the following ratios for 2023 and 2024. Profitability. In profitability ratio, you compute gross profit margin, operating profit margin, return on capital employed, ROCE. Liquidity ratio, you calculate current ratio and quick ratio. In efficiency ratio, you calculate inventory turnover periods in days, receivables collection period. For gearing ratio, that is solvency and stability ratio. You calculate debt to equity ratio, interest coverage ratio. So these are simple calculations that you make. They are straightforward. The question are set out this in a way that you calculate them without a problem. Now, in computation of ratio, don't bother yourself to go and try and see if you can copy a formula. Some will write it in their hands, some on their lap, some in their chest. It's not necessary because ratio gives itself definition. The definition of ratio alone is able to give you the formula of that ratio. So you don't need to go to that length to go and copy and kill yourself for formula. No, you don't need formula. All you need is for you to understand the ratio you are computing, and it will be easy for you to handle. So when you see like gross profit margin, you just know that it's gross profit over sales or revenue times 100/1. The same way operating profit margin, they use the operating profit, return on capital employed, ROCE. So you know your computation of capital employed now, equity plus non-current liability, that's capital employed. So that's the only problem you have there. Then you have operating profit or earning before interest and tax over capital employed. Then our liquidity ratio, of course, current ratio, you know what it means, current assets over current liabilities, and it's expressed in ratio form, proportionate form. This is to this. Quick ratio, you remove a fast moving item or slow moving item from current asset. and then overcurrent liability. That's it. Then inventory turnover, of course, you know these are turnover that takes average of inventory, opening and closing inventory, if you have. But if you don't have, you can just use one. You can also make assumptions where you are, what you are doing. Then we have receivables collection period, then gearing, debt to equity ratio, interest coverage ratio. These ones are simple things that you can remember without having to implicate yourself by copying formula. With the name alone, you can get the formula and solve it. B is interpret the results of your ratio calculations by 1. Comparing 2024 and 2023. Listen, it's very, very important that you compare the 2 years, and you must comment on the performance of those years and how they fared during the year. When you are comparing, you will always say the one that is doing better, the one that is not doing better. Identify strengths and weaknesses. Explaining possible operational or financial causes of the changes. Your answer should be written in professional report style. Professional report style. So you know how to write report. You will not just write answer like some of you will solve and say equal to 10, and that is it. Or you just say, yeah, this thing that so thing is weak. This one is weak. Or 2023, it was weak. 2024, it was strong. Say, your answer should be written in professional report style. C. Using your analysis, assess the financial health and going concern risk of Omega Manufacturing PSC. Assess the financial health and going concern risk. Like I told you, these are the reasons for computation of ratio. If you cannot do this, then it's useless trying to compute ratio. Just computing ratio is not important. It is this analysis, this interpretation that makes ratio useful. State whether the company is improving, stable, or deteriorating. There are signs of liquidity pressure, overtrading, or excessive gearing. Investors and lenders should be confident or cautious. Support your conclusion with specific ratios. So when you are doing this, you must show the ratio that you are using to make this conclusion. And since you have already computed the ratio, you give us the figure of the ratio. Now, based on this figure, or based on this result of this ratio, this is what it is. So it's important that you say it. It's not by just writing from your head, and there is no citation on the ratios that you are using to base your conclusion. Your conclusion must be based on a particular ratio that you have already concluded, you have already computed. D. As a financial consultant, recommend 4 practical actions management should take in 2025 to improve profitability, cash flow, debt position, and operational efficiency. When we learned ratio, I asked 2 people to find how to boost collection period. And I think I gave it as an assignment, even though I didn't get the response. But from the work I gave you in ratio, those my students that are here, you should know that this should be a walkover to you because you already have a work that I gave you on this. So it's not going to be difficult for you. So my friends, I have shown you this, and I believe that the ratio question will not be a problem to you guys will be able to solve it. Like I said, I'm going to do 5 videos, which will be within 15 to 25 minutes. These videos will not be more than this. It's only showing you the questions. I will solve the questions later. For now, I'm going to move to another video. So I'll stop this video. I will start another video. So if you have signed in on this video, you can sign out and then join me in the next video.